Hey, we're going to be checking out ticker symbol XLF. XLF, that is the financial sector of the market. We currently have the 1 month chart up here on the screen. Last time we looked at this was about 3 weeks ago on the 17th, so about halfway here. It's even marked for us. It was right around the same price. It's close to $1 more than last time, but again, just as a whole figure, it was 31 then. It's still 31 now. We did have a buy point on this of 30. That's probably going to stay the same. And then a resistance point of 40. So we'll begin to update this. But before we get into the technical analysis, there are some news headlines that came across. I think it's right that we go through some of those. And then we'll check out the technical analysis to see, is this still a decent time to buy, and see if we notice any trends. One other thing before we get into the news is I like to look at the holdings of this company. Again, you can see pretty much all of it's in financial. There's a very slim margin in technology. Half of their assets are in the top 10 holdings. It looks like their biggest holdings are Berkshire, which we do cover. They have Visa at 8, JP Morgan's at 8, MasterCard's at 6, or close to 7. So those are the main ones. We don't have any of these stocks on our watch list outside of Berkshire. So I guess in a sense, we're good. And I have to imagine because they own Berkshire, that might be where the technology comes from, because Berkshire is a big holder of Apple. We might want to add either JP Morgan or Visa to our watch list as like a value stock. Uh, we'll look into that as a possible consideration. But with that said, let's get into the news. So the big headlines, if you're unfamiliar with this, was one of the largest banks in a very long time has failed. Silicon Valley Bank, SVB for short. It is the country's 16th largest bank to actually fail. This is the biggest since 2008 financial crisis, where the Washington Mutual ended up collapsing. It's also the second largest bank failure in U.S. history. Okay, I said that. It's also the first bank to fail since 2020. So not that long ago, there was another bank failure. Probably, obviously not as big, but still. The bank had $209 billion in assets and $175.4 billion in deposits. Roughly 87% of the deposits were uninsured. Shares of SVB Financial were halted for trading after losing 60% and another 60% in pre-market. The concerns, Signature Bank was another one that did end up failing. And First Republic Bank, which serves some companies in the venture world, was also targeted as potential failure. I don't believe this one actually did fail, but it was very close to it. What some companies did, I think it's in this article. Maybe not. I thought it was. Okay, it must be in the next article, but so yeah, so a big bank did close, so that was a big news. Wall Street splits over the Fed's next move. So this article just goes into how a lot of people were worried about the collapse, pulling all their money out, and then this on top of the Fed's annual, or I don't know, a monthly meeting, just their next meeting for the FOMC, where they were going to talk about rate hikes. Some people were saying, based on some of the communication, Jay Powell was saying that rates might go back up to 50 basis points. Others were saying it's more likely 25. One person even was saying they might just put it on pause for now. Ultimately, it was 25 basis points. Most of the analysts agreed with that. That's what they expected, and that's what did happen. As we kind of scroll through, that's pretty much it for this article. So if we move on to next, so Credit Suisse, that's a European bank, one of the largest ones, and they had a crazy turn of events. Credit Suisse just suffered its worst day on record, sending the stock plummeting 22%. This ultimately is going to end up them being purchased by another bank. Um, if we just look through this, a lot of the banks did go down, especially in terms of indexes. Again, they're talking about what they expected the rate hike to be. That pretty much sums up this one. So there was concern over Credit Suisse. If we move on, we have um, Yellen says the Silicon Valley failure didn't undermine the confidence in the system. So she's just saying this is a very fluky thing, mainly because of what this bank was targeting. I believe it mentions it somewhere that this bank was, more so in the venture capitalist firm. That was mainly its customers. Also, because the customers weren't insured, it led to a lot of worry. Um, Here it goes into no matter how strong the capital and liquidity supervision are, if a bank has an overwhelming run that's spurred by social media, it's likely to lead to danger. And so that was one component of this that we're going to touch on a little later, is that this bank run that happened, uh, they're saying this is the first time that social media had such a large impact on that. And all it started was with a couple tweets, a couple WhatsApp messages, but we'll get into that a little later. Um, for this article, that pretty much wraps up this one. Just Yellen more or less making the point that this was not a something to worry about. It really was just a lot of things kind of added up, and that's how Silicon Valley Bank got targeted. Next, we have the Fed decision, banking bailout, and Credit Suisse. So a couple of the headlines for this one, mainly, so the Fed met, they ended up raising by 0.25 basis points. I believe that's mentioned somewhere in here. We still expect the Fed to raise 25 basis points. Last week, Silicon Valley Bank and Signature Bank, those collapsed. So here's the mention. So First Republic was this next bank on the chopping block, and so it looks like 11 of these U.S. banking giants funneled in $30 billion in deposits to try to keep them afloat. The company still ended up losing 70% of its market share. So that plan didn't work out that well. Or, I mean, the fact that the company is still open, maybe it worked out to an acceptable rate. U.S. investors kept an eye towards Europe, where UBS agreed to a $3.2 billion deal to take over Credit Suisse. Credit Suisse shares trading in New York closed at $2.01. So that was the big news there. Credit Suisse was bought by UBS. Again, that's European, so it doesn't really impact us, but because the world is getting so small these days, something like that can clearly impact us too. Here's just a quick article. A bunch of analysts that study XLF, they don't think that they're going to break the $30 mark. That's pretty much all this article goes into. There's some names, Ryan, Shauna, Dave, that all these analysts, they kind of all have the same opinion here, that while it has been trending downwards and now it's kind of flat, they don't expect it to break below 30, barring any like crazy event happening. And then the last article it goes into how people are thinking social media is kind of to blame to this, because this is just the first time that social media has had such a direct impact, where let's kind of see if we can find a little more of the story. Uh, on March 9th, depositors scrambled to pull out more than $40 billion from SVB as panic spread throughout Twitter, platforms like Slack and WhatsApp, after the bank revealed $1.8 billion loss within its bond portfolio and plans to raise $2 billion. That just ran like wildfire across multiple social media platforms. In response, social media saw a surge in talk about a run, and uninsured depositors acted quickly to get out of that bank. The bank did not have enough cash or collateral to meet those extraordinary rapid outflows, and on March 10th, it ended up failing. And then here's a nice little sheet of, it looks like Signature was the third largest in a long time, or possibly ever, yeah, in U.S. history. So two large banks, the second and third largest in our failure history. If we keep scrolling down, here they're talking about the social media. It's a complete game changer from what we've seen before. There were a couple of tweets, and then this thing went down much faster than has happened in history. And frankly, I think the regulators did a good job of responding very quickly, because normally you have longer to respond to this. If we just keep scrolling, that's pretty much the news. We had a failure, two major failures in the banking industry right here, Silicon Valley and Signature. Credit Suisse ended up plummeting. They got bought out. First Republic ended up plummeting even with bank support, but they at least stayed alive. No one purchased them. And so yeah, now let's dig into the technical analysis here. So we have about a little over a year, 2 years possibly. We're just zooming in here. Last time we looked at this was right here, this red candle. It looks like we're starting to climb back a little bit. So I'm content with my lines where I have them. Again, we have this green mark for a good time to buy. Here's like the lower end of the fair value range. Here's the higher end, and then ultimately what seems to be a strong resistance point at 40. And we could even really bring that down just a little bit, maybe like, it would still be in the 40s. So I'm pretty content with where it is. I'm just going to update my chart here, which not much is changing outside of the date. So yeah, I'm probably going to look into buying this, very small amounts. So just to summarize, we have XLF currently at 31. I have a buy point of 30. This was marked as a buy previously. I ultimately didn't end up pursuing that. Since it's still on the list, I do intend to buy that probably early next week, as long as I can remember to do so. But outside of that, that pretty much sums up the financial sector. If you have any comments or questions, by all means leave them in the comments. I'd be happy to read those. Outside of that, please like, subscribe, and I'll see you on the next one.